Hello, everybody. Looks like we have a dollar breakdown. Some technicians would say that it could end up being a triangle still, as long as we hold these highs at 94.5. You have to be open to the potential that there still could be one more surge to the upside. I wouldn't fight the momentum today, wait for reversal days to do so. I was wrong in cable. Okay, so all the divergences, I believe, have been not quite blown out, but I'm still maintaining longs in Europound. Still think that we're grinding out a turn here. So be aware of that. And also with the hot inflation number, US dollar yen's looking weak, and part of that is that yields are softening. We've come off 9 bips. But just like the dollar, to me, I don't believe this is a top, just like I don't believe that will end up being a yen top. To me, this looks like just consolidation before another shot to the upside of higher yields that, could take us up to 2%. We could still work lower towards this level, 167. But I don't expect a big break in yields, just a pause, and that's what we're getting. We're approaching some very important swing levels. If you recall in last week's video, this was the bull bear line in S&Ps at the 47.45 level. And once we broke it, we accelerated to the downside. Now here we are into a test of this region. I believe that you could attempt scalps here. I don't know if we're going to crash and take out new lows, but we could at least correct this bounce. We start closing over 47.50, and then I believe you have to be open towards new highs. Because when you look at this daily chart, actually the uptrend did hold off of these lows here. So, you could look at a line like this. And then if we take that out, the S&P is in trouble, but still holding an uptrend. You really can't say that the market has peaked until we take out 4,500 on a closing basis. So there's your uptrend that we have in the S&Ps. So watch this level that we're approaching at 47.45. I think that there could be some type of fade from there. Also want to point out the star of the show the last few weeks has been WTI. And we had a real big bulge yesterday in WTI. And I'm looking at this daily right here. And I believe we're about 78%, 88% back. Be careful with your WTI longs. I think that we could pull back at least to 76 before we make new highs. Put out some shorts here. Aussie surprised me. And with Aussie acting good, I thought that we would have the potential for one more low in the silver market. I haven't really given up on that. We could still have an ABC rally a bit more. If it starts closing back over these highs, you have to declare a bottom. Gold's had a nice advance with yen weakness. Perhaps we're going to try 1840, but I still think that there's better levels to be looking for gold longs and miners. I want to take a look at the miners, and you'll see that they're not doing much. They had a decent day yesterday, but here you go. Here's your GDX. And, we're really just bouncing, possibly putting in a third higher low. Here's the low, here's a higher low, and here's a second higher low. I'm still looking for 27, 26 in GDX, which is going to be a time where I'm going to be committing equity to miners. So keep an eye on that. I just want to bring up the NASDAQ, which is weaker than the S&Ps. And I believe that NASDAQ could generate maybe 16.2. As you can see that we're way below still the breakdown in the NASDAQ. S&Ps are there right now at this 47.45 level. And, you want to take a look at what's happening in yield. So same thing with TLT. I talked about us being at some support yesterday with Mike on the air, and we've had a little bit of a bounce. I'm really not impressed with this bounce. I think that there are lower levels to come. This is why we held this level right back at major support. I'm not looking for a massive bond rally. I think eventually we're going to break down under this 140 level and take out this level. So I'm still looking for higher yields. Possibly Powell calmed the markets down a little bit yesterday. And the VIX, we talked about this as well, never really did much on the upside during the damage we had technically. And we're going to see if we're going to press the lows. I still think that insurance is cheap, and you buy insurance if you stayed long through that recent rout that we had last week. You may want to purchase some protection as the VIX is coming down. You don't want to buy the protection when it's up here or up here. This is when you do it in here or in here. We're still posting a higher low in the VIX. So that's something else to pay attention to. The Russell, which has really been dogging it, very weak bounce. This 208 level is very important for the Russell. And just put up a weekly here and you'll see what I'm talking about. Kind of looks like the dollar, doesn't it? So the dollar had this type of range, although the dollar never did this, which is what I'm looking for it to do before it completes, is to be in a triangle and have a triangle breakout and then negate the breakout, and then you're on your way. So I would still be selling rips in Russell. I think that we could get a breakdown under this 208 level, which is going to measure down towards 180, 170. So Russell's still looking pretty negative to me. Just want to show you what I see happening in CAD. CAD's been under a lot of pressure. Looks like it wants to head down towards new lows, although I would be a little bit careful down here. I wouldn't just chase anything with FOMO here, especially if we get some type of correction in the crude oil market, which I think is possible. And then you could get a rally in USD CAD. So looking at what's happening across the board, if you miss something based on the number, it's okay to sit and wait and do nothing until the picture clears. That's what I'm doing right now. And I still think that there's going to be a time to try the long side of the dollar again. I still don't believe that this double top is the final high in the dollar before we get a bear market. And shorting candidates would be the euro. So I'm going to wait for the first reversal day in euro and go with it, because I still think there's a chance that we're going to trade 111, 110.50 in the weeks ahead. And as you can see, while we're talking, the S&Ps are starting to come off from that level. Look at that, kissed it. A nice kiss at 47.45. So I'm not the only guy looking at this being a bull bear line. If you're a scalper, you could short it, risking over this high. And remember, always take partial profits. Even if you're looking for new lows and one more low in S&Ps, for it to pull back towards this moving average on the 4-hour 46.85, be a 50 handle winner on the S&Ps. So that's something to be aware of right here. Bear market rallies are, 2-3 days sharp rallies, counter trend, and this is pretty classic. The world was ending here, and in 2.5 days from Monday, we've retraced over half, 61.8 to 78.6. This is not a time to be re-entering longs. This is a time that if you were nervous down here and wish you had taken some risk off, this is the area to do it. Okay, so whatever you were thinking about blowing out here, now you have a chance to do it and recapturing principal while that's happening. So the big story today, though, is a jailbreak out of the prisoner formation. in the dollar index. That's what I ended up calling this sideways action from Thanksgiving, is the prisoner formation, and we have a jailbreak here. So let's see what happens in the next few days down around 95. I'm not ready to declare a dollar top, and I'm still not ready to declare a silver bottom. So we could have some follow through, but patience, I believe, will bear out. And you know what? If I miss it and these markets confirm reversals and trends, you can always finesse on pullbacks or rallies for your entry price. But it is a news flash. I was wrong on GBP, and I'm surprised at the strength in the Aussie here too, although it makes sense with what's happening in the precious metals. I thought we were going to fail from about 72.20. I'm not getting long Aussie. I need to watch this action for a few days and see the reset. The only new position I took was a potential top pick in the crude oil market here. See what we have on 15-minute time frames. It's trying. New highs will be non-confirmed, just like this one is. That's why I'm taking a shot on the 15-minute chart, and we need some type of negative candle here. This is not going to be the final high because we're confirming, but just looking for a pullback in both WTI and the S&Ps, and being patient across the board. And sometimes the right trade is a no trade. And so with that being said, tomorrow we'll get some great answers about what's going on with Luke Groman's going to be with me tomorrow. And Luke is a very well-known economist. He's going to give you a different view on interest rates. And he's a believer that even though we're in this cycle now where the Fed is tightening, that eventually we could end up going to negative rates. That's when you're not going to want to own the US dollar. So mark your calendar for tomorrow at the same time with Luke Groman, and look forward to seeing you. Be careful. As you can see, you're getting this pullback in S&Ps right now. So this level, in fact, Mike was saying earlier in the chat room, and that's why I encourage people to come into our trading room, that he thought that the S&Ps were a better fade than NASDAQ. And here we are about 18 handles off that 47.45 level. And that's a beauty of technical analysis, is if you're patient and just wait for important areas to be tested out, you're going to be successful. If you think you have to trade every day, you're going to make your broker rich and blow out your account. So let's see what type of pullback we get here in the S&Ps, what kind of effect it's going to have. Is that going to cause more dollar weakness, which it looks like it is? And I think the new paradigm may be that down markets in S&Ps are down for the dollar. It used to be up for the dollar. So we'll see what happens here in the S&Ps. I really think that's really the important aspect of what's happening on the board, and perhaps we'll end up with some type of reversal day by the end of the day. Your 2-day off number is 46.70. So if you should happen to get that today, you want to go to the door. And I'll see everyone tomorrow for our interview with Luke Groman at Luke Groman. Don't miss it, because you're going to be shocked when if you think rates are low now, you have no idea where they have gone to in the past and where Luke thinks they're going to in the future. So above all, don't just count your pips, count your blessings, and see you tomorrow for the interview. Adios.